I think that we can start on time. So good morning, everyone. My name is Alice Korovesi. I'm the Managing Director of INZEV, and on behalf of the SMAFIN Expanded Consortium, I would like to warmly welcome you to the third cross-country lab, which is entitled From Tools to Transactions, How Smart Financing Actually Reaches the Market. Before starting our session, our 2-hour session, which I can promise it's going to be very interesting and insightful for everyone, I would like to give the floor to our SMAFIN Expanded project coordinator, Kiki Papadopoulou from CRES, for a welcome, and then we can start with the agenda as you have all received it. Kiki, the floor is yours.
Thank you, Alice. Good morning to all. A warm welcome from my side too to today's cross-country lab of the SMAFIN Expanded project, which is co-financed by the LIFE program. For those who are joining SMAFIN event for the first time, the project aims to support development of smart financing for energy efficiency solution. This project is the second phase, and it is implemented in 5 countries: in Bulgaria, Croatia, Romania, Slovenia, and Greece, which also serves as a project coordinator. Our core activity is the organization of roundtable discussion, but this activity is supplemented by other important activities as thematic working groups and cross-country labs as today's event, which aims to exchange experience and knowledge among the countries that are facing the same barriers for financing energy efficiency. You can find more information on our website, so I will not take further time from our cross-country event. And without further delay, I'm very pleased to give the floor to our project advisor, Mr. Adrien Bullier, to introduce us to today's topic. So, Adrien, the floor is yours.
Yeah. Good morning, everybody, and thanks for attending this SMAFIN Cross-Country Lab, Volume 3. I don't know if someone is sharing my presentation or if I need to do this.
Yes, just a reminder before Adrien for the non-speaking panelists just to close the cameras. Thank you. Please, the floor is yours.
I have the pleasure of being the project advisor for SMAFIN. But that's quite a recent news, so I haven't been following all the activities of SMAFIN. So I'm going to try to give a bit of a background information. What is the current policy landscape around national dialogues on energy efficiency finance, and how SMAFIN is playing a role in this landscape. So if we move to the next slide, just a few reminders on the energy efficiency financing challenge. So these figures might be a bit outdated, and I haven't taken the last ones, which would be in the report on energy efficiency financing, which came out in March. But overall, towards 2030, we're looking at 3,000 billion euros to be invested in energy efficiency, which leaves an investment gap of 165 billion every year. So that's between the investment needs and the investments that would happen anyway. We need to find an additional 165 billion euros every year. And to bridge that gap, we have, if we move to the next slide, very clearly, we know that we have a certain amount of public funding available. And as you know, that is going to be under discussion again with the next multi-annual financial framework. But we estimate that public funding from the EU and from national funding can only bridge 10 to 20% of the investment need, which means the rest will need to come from private finance. Now, when we talk about private finance, we're not necessarily talking about very complex schemes involving pension funds. They are involved in the background, but for most of project level finance, that usually means going to the bank to get a loan and repaying it over time, thanks to partly the energy savings, partly the increased revenue, partly the equity of the owner and the value of the assets. So I think the key challenge that we're looking at from the EU perspective is how do we get from a landscape where currently a lot of the investments in energy efficiency are funded through public funds to one where we are able to mobilize massive private finance. And really here the key word is leverage, is how do we use public funds as a leverage to attract private finance. We move to the next slide. So this I would say is really at the center of the objectives of the European Energy Efficiency Financing Coalition, which was set up at the end of December 2023, and was the first declaration by 27 member states to participate in this coalition, where the aim is really to facilitate the mobilization of private finance for energy efficiency, and also to establish funding frameworks that are viable in the long run. As you know, if we want to achieve our objectives, we need to have frameworks which can deliver in the long run and not just spend the money, disperse the public money. So the Energy Efficiency Financing Coalition includes the 27 member states as participants, and I'm happy to see that we have a number of representatives from the national hubs attending today. We have 67 financial institutions taking part in the coalition and 41 industry members who applied through open calls for membership. And the activities of the coalition is really trying to bring together the relevant market stakeholders to explore how we can better leverage private investment. So it's really a dialogue with the market stakeholders, including the European Commission and the member states, in order to roll out finance for energy efficiency. We move to the next slide. So how does the coalition work? Basically, we have what we call three layers. The first one is the General Assembly. That's the high-level representation from all members, and the General Assembly is taking place actually next week on the 5th of May in Brussels. The second layer is what we've called EU expert groups. So that will be exchange meetings on specific topics. Currently, we have 2 working groups active, one on financing building renovation, the other one on financing energy efficiency in industry and SMEs. The third layer, which we'll focus on more today, is the national hubs. And here the idea is to have a bit the same structure as the EU level, but really to implement a cooperation, a dialogue with all key national stakeholders. So beginning with government institutions, financial institutions, industry, and all relevant sector stakeholders. And the participants in those national hubs are don't necessarily need to take part in the EU level activities. If we move to the next slide, so the mandate for the national hubs is really to be implementing the ideas of the coalition at the national level. How that is done really depends on the context of each member state. So I think what is really interesting here is that the member states are responsible for defining the mandate, what they want to do, and to implement it themselves. And we from the EU side are supporting them through the Secretariat of the coalition. And so in terms of work topics, and I think this is going to be interesting also in respect to SMAFIN. We have very different work topics, some of them on energy efficiency financing strategy in general, access to data for financial institutions, one-stop shops, energy efficiency in businesses, energy performance contracting is also one of the topics. Next slide. So here I'm not going to go into details. You'll be able to look at this. Just know that we have currently 19 national hub chairs which have been nominated, and currently we have 17 hubs which are either fully operational and actively working, or in preparation and should be put in place very soon. Next slide. And here I'd like to just now make the link to this meeting with SMAFIN. I think looking back on this, since we started engaging with stakeholders on energy efficiency finance in 2013 with the Energy Efficiency Financial Institutions Group, so the EFIG. And these were working groups at the EU level, although we didn't have the member states. In 2017, we started the Sustainable Energy Investment Forums, which was replicating that approach at the national level. In parallel to that, from the LIFE Clean Energy Transition Program, but also previously under the Horizon 2020 Energy Efficiency Program, we have been funding what we've called financing roundtable projects. And this is where SMAFIN pertains, basically. So these are projects which have been doing organizing bottom-up financing roundtables, usually not driven by government, but more by NGOs, consultancies, research organizations, civil society. And I would say the last evolution of that is the European Energy Efficiency Financing Coalition. Why am I saying this? I think this is all different approaches to one same objective, which, as I said, is mobilizing private finance for energy efficiency. And this is where I think I'm really happy to be taking part in this cross-country lab, because I really see all these attempts as labs, as we have been trying different things, and all these approaches have advantages, maybe some issues also, but I'm really keen to understand and to get really the lessons learned from, in particular, SMAFIN. Why SMAFIN? Because it's been working across 5 countries, which is a lot. Been working for, I think, 6 years, because this is a second project. So there's a lot of lessons to be learned. This is also one of the reasons why we invited, in particular, the national hubs of the Financing Coalition to attend, to be able to get some of the lessons and to exchange. And to finish on SMAFIN, I think it's really interesting also because you have 5 countries addressed. In Greece, actually, CRES is the coordinator for SMAFIN, for the SMAFIN national activities in Greece. But CRES and Kiki is also the coordinator of the Greek hub of the coalition, which shows that there's a perfect convergence between both. In Romania, actually, last week we had a final roundtable of the Romanian activities, which was the occasion to launch the Romanian hub of the coalition. Now, due to government not falling on that day, it was a bit difficult. But in any case, it was really interesting to see that there's a willingness to hand over the results and for the results of SMAFIN to continue under the Romanian hub. In Slovakia and Slovenia, there are hubs in discussion. As you may have seen, we have hub chairs which are nominated. They are not directly part of the SMAFIN consortium, but I know that there are very close discussions with the ministries in charge. And in Bulgaria, for the moment, we don't have a national hub being prepared, but that may be coming in the future with the new government. So I'll close here, and if we move to the next slide, just my little time for advertisement. Actually, you may have seen that today you have the info day on the live clean energy transition call for proposals 2026. It's happening currently. Actually, this afternoon we're going to release all the videos for the different topics which we are proposing for funding. You're not missing out too much because everything is, some of it is live, some of it is pre-recorded, so you will have access to it in any case after this meeting. And yeah, I will stop here. Thanks for your attention, and I'm looking forward to a great meeting.
Thank you very much, Adrien, for your introductory intervention to this. And let's move to the core part of the third cross-country lab of the SMAFIN Expanded project. Before that, I would like to say just a few things, one sentence about the lab, that this lab, which is the third one, the first one happened during the C4E forum last year in Croatia, and the second one is online, and all participants, you have all received the fact sheets of what has been discussed. This specific lab, the third one, focuses on a very concrete and persistent challenge. While we had a wide range of financing tools and policy frameworks that are already in the market, their translation into real and bankable projects and actual investment flows remains limited, according to what we are discussing during the meetings, during the roundtables. So today, during this third cross-country lab, the discussion is not about designing new instruments, but it is about understanding how these instruments actually reach the market and what prevents them from doing so at scale. I'm very happy to launch the second session of this cross-country lab. The focus is very practical across Europe. As I said, we have a wide range of financing tools and policy frameworks that are already in place. But however, we have a key challenge, and this is what we're going to discuss. How these translate, I mean the financing tools, into actual transactions and real investments. I'm very pleased to be joined by three excellent speakers, panelists, bringing complementary perspectives, and I would like to call them and open the cameras. First, Kamelia Georgieva, senior experts at the National Trust EcoFund in Bulgaria. Welcome, Kamelia. Dijana Bezjak, Head of Service for Financial Instruments at the Ministry of Regional Development and EU Funds from Croatia. Welcome to you also, Dijana. And last but not least, Ioana Voinescu, Head of Sustainability at Banca Comercială Romana, if I'm saying that in a proper way, in a Romanian way. Welcome to you as well, Ioana. We have structured this discussion into 3 steps. To make it easier for all of you attending. First, we will identify where the pipeline breaks. Then we will examine the underlying bottlenecks. And finally, we are going to distinguish between structural barriers and those that can be addressed through targeted interventions. So I would like to start to kick off this session with the broad questions to all of you to discuss where does the pipeline break actually. So my first question to all 3 of you is, at what stage of the investment pipeline do projects most commonly fail to materialize into transaction? So let's start with you, Kamelia. Please unmute yourself.
Thank you. As Alice already mentioned, I'm representing the National Trust EcoFund of Bulgaria. We are an independent from the state public institution, and we provide subsidies grants for environmental projects, mainly to public beneficiaries. When we look specific, so I will be focusing in my interventions here mainly on based on our experience with public beneficiaries. When we look specifically at public projects, I would say that the failure happens already at the policy level, at the level of the program design. In this regard, I would like to focus on several points. One of the key barriers is actually market distortion rather than market failure. In some countries, including Bulgaria, energy price subsidies significantly distort the economic logic of energy efficiency investments. They effectively undermine the business case as projects that would otherwise be financially viable under normal market conditions no longer meet acceptable payback periods. As a result, existing financial instruments become underutilized or even irrelevant. A second major issue is the widespread use of 100% grant financing in the public sector. Also, when we speak about residential building, this is true also for Bulgaria. While grants are important, full grant schemes tend to create passivity among beneficiaries and reduce incentives to engage with financial instruments such as loans or escrow models. I want to mention that we are at NTF are the good ones. We don't provide 100% grants. We have great experience in blending funding in partnership with another fund represented here in this webinar, but also our beneficiaries get their co-funding very often from commercial banks. As a result of the grants, of the 100% grants, there is a lack of market predictability. Public authorities and companies are often ready to invest, but when a new grant scheme suddenly gets introduced, the market just disappears. This discourages long-term planning and prevents the development of sustainable financing pipelines. Another point is that there is a clear shortage of qualified intermediaries who can provide reliable technical assistance and structure bankable projects. And at last but not least, beyond regulatory, financial, and market barriers, there is a set of behavioral barriers that are often underestimated but critically important. And I suppose we will come back to this.
Of course. Thank you, Kamelia. We will have the time to analyze further what you just said. For the same question, at which stage of the investment pipeline do projects most commonly fail to materialize into transactions? I want to also hear the first impressions from Dijana, and then we will move to Ioana. Dijana?
Thank you. Hello from Croatia. From my experience as being as a managing authority awarding public funds to national banks, development banks, and also commercial private banks, it's in the stage of the setup, because it's a long process with public procurement where you have to procure the commercial banks that will actually do the transactions. It's a 1 year long process of negotiations. But what we always try to explain to the banks, it's nothing to negotiate about, because in the public procurement, everything is set, eligibility criteria, regulatory requirements, and there's nothing to negotiate. So it's better to call this 1 year long process as the alignment of interest, where we create the trust relationship with the banks and then convince them to adapt their procedure to the EU funds procedures. So basically, this is the crucial stage, because after this negotiation, let's call it, we work with 17 big international banks that have a network, a sales network all over Croatia. So all 3,000 people have to understand and know the instrument before they start selling those loans. And they are not skilled in energy and efficiency, so we have to make it really simple and stupid, so every bank teller knows about the product, know how to sell it, and know how to do the approval process. So it's a very long process that we have to undergo and teach them, so when the actual approval process starts, it's seamless. And then, from my experience, if you create the supply of money, the pipeline of projects will be there. And if you make the procedure as simple and stupid as possible, that all the stakeholders understand, then it will work. So this is the crucial from my perspective.
To make it as simplest as possible. Okay, thank you, Dijana. Your views, Joanna, on this, and then we will start going deeper and deeper.
Hello, Alice. Hello, everybody. I hope you do hear me well as I'm traveling. Sorry for that.
Excellent. Thank you.
Thank you. So, as you mentioned, I'm a sustainability officer in a commercial bank in Romania, Banca Comercială Română. This is the right spelling. And we are part of Erste Group, having a main objective for the transition towards the CE countries. And this is one objective that we split in different pillars of targets, let's say. The first one being decarbonization. And here we have a strong pillar to decarbonize our mortgage portfolio. And for this, we find renovation and how we bring energy efficiency in our stock of buildings, very important. It's something that we take along all the segments that we are financing. And now starting with the household, here we have a product for efficient buildings, AMB certificate, energy performance certificate, but also looking in the last 2 years to structure a renovation loan. And we have found many challenges to this. And we find a very important topic to educate and to create awareness in the country with respect to such products, with respect to the need of renovating the housing. We had some campaigns to discuss with our clients and to, let's say, convince them with the right instruments that they have to look at renovation for their buildings. And I'm saying this because we have let's say, our local context with lots of inefficient buildings in Romania. Based on the statistic, we have more than 75% buildings with the worst certificate. And they'll stock most of it built before the 90s, which needs quite a big renovation. This is also important looking ahead, the fact that energy is very, energy consumption is expected to grow. If we are looking at our needs as a country, but also at AI adoption and digitalization for all of us, so energy consumption will grow. Energy consumption of buildings in Romania accounts for more than 40% of the final energy consumption. So very important for the sector. And also it's important to find the right instrument for the people to use. We were in the SMAFIN last workshop that was just mentioned earlier in Romania. And there, besides the hub that was announced, also Ministry of Development announced a 30 billion fund, that renovation fund that is going to be set up in Romania to support the renovation and to increase the renovation rate towards 3%, which is now below 1%. So our renovation rate is quite low. So we need lots of investment to this. And what I find in the last 2-3 years as bottlenecks is firstly to put and to aggregate all the efforts of the stakeholder in such projects. Firstly, to have the right construction sector to be able to do such projects, to support permitting and all the technical advice that is needed for such projects. And here we have also a regulatory bottleneck with very complex permitting in Romania, with the changing subsidies and lots of other uncertainties that we see in Romania in terms of taxation. And this delays a lot projects in energy efficiency area. Also looking at the sustainability rules, for example, for us is we find somehow difficult to collect the relevant data for us in order to mark the green loans and to mark the energy efficiency loan, because we need, in fact, the energy certificate. We need the audit certification, which sometimes is not very easy to obtain, especially that we need to have it before and after renovation. And these are some angles that are very important for us. But what I would like to draw attention to at the first glance is that firstly, we need to create awareness in the market that renovation are needed. And if people are not going to consider this in an early stage, then we can find the regulation, future regulation that will affect all of us, increasing cost of energy, and also looking at the recent projection with the ETS2 implementation, for example, we expect that the cost will further increase. So awareness in the market, regulatory challenges, sustainability, data disclosure, and then the right instrument, as also Dijana was mentioning earlier, because for us as a bank, when we look at individuals and SMEs, the most important part is to make the instrument very easy, ready, accessible, integrated into our digital platform, and with the right pricing for them to be absorbed. And then the grant mentality that I think we'll all further discuss in the next questions.
Yes. So if I may continue the discussion with you, Joanna, and let's start getting deeper and deeper. From the banking perspective, you are working in a bank. If you can rate a little bit, where do you most often see projects fail? Is it the credit assessment stage? Is it the structuring? Or is it probably earlier at the stage of project maturity? If you can just rank it from your experience talking and from all the case studies that you probably have worked with.
Yeah. If we talk about energy efficiency, we can look at all the client segments. So for the households is the product structuring. For the household, the product needs to be very simple, to be time to yes, to be very quick, and the documentation light. Hence, we finance with the mortgages for energy efficient building A and B, and here we have a 100% digital flow into our internet platform, so it's very easy to be accessible for our clients. If we talk about a renovation loan, we had several attempts, let's say, in the last 2 years. For example, we had a special loan for installation of PVs, and we found that people in Romania are rather waiting for the grants and for the subsidies to invest in such projects rather than applying for a bank loan. Not to mention that such a renovation loan, if we are structuring as a consumer loan, needs to be repaid in 5 years in accordance with our national bank regulation. Hence, the repayment rate could be quite high per month, let's say. Otherwise, we can structure as a mortgage loan, but this means to have the available mortgages. Sometimes people are not willing to put the mortgages. Then if we go to SME, we find challenges in structuring a business model where we can see the energy saving and how the loan is going to be repaid from energy saving. So rather structuring and having the right financial model could be a challenge for SMEs. Also putting together all the stakeholders that I mentioned about permitting, about the construction, about the technical assistance. This one-stop shop that you're also discussing earlier is very important when you set up this kind of projects, especially for SMEs who needs very simple solution. Then structuring inside the bank, I mean the financial standing of the clients are a prerequisite for any type of financing. So basically we have the same rules in terms of credit worthiness in case of repayment capacity as for all the other clients. So basically this remains as a prerequisite for the bank in order to grant a loan. And we find it difficult nowadays with the macro environment where we see the interest rate in Romania quite high, and it's higher versus Europe. We have a huge inflation. In Romania still was in the last 12 years, like 12 months as almost 10%. And this increased quite a lot, all the costs in Romania. Worth mentioning that, in fact, the living costs and the building construction, for example, material costs in Romania increase more than inflation. We dare to say that like more than 50% in some areas. So the cost of any investment is considerable. Hence, also for us, it's a challenge to make things simple, to use programs like with the international financial institution in order for the client to have a better interest, let's say, to have some incentives to take a loan, and also maybe some capital rebate in order for them to take some money back if the project is going to be efficient and to reach the parameters. Yeah, so basically in product structure.
Further in the later stage, but let's give the floor first to Dijana and Kamelia.
Yes.
Thank you, Anna. Dijana, from your experience, you are working in a public authority. At which stage do processes tend to slow down or break, if we can say, especially when it comes to underwriting and approval timelines?
what we did, we designed the fast tracking procedure by taking off technical expertise off of the backs of the banks. So they don't have to worry about that, because banks should do as financial institutions just their job as financing. So we try to reduce all the technical and regulatory risk on ourselves. So we designed it, as I said, in the setup stage, all the technical forms, all the documentation, and we bypassed it. We proved the DNSH compliance. We proved the climate proofing at the operation level. We prepared all the savings documentation, so the calculation of the energy saving, regardless is it about the citizens, buildings, or photovoltaics for the SMEs, because we tie them to the national standards. So we don't even require the energy audits or any kind of confirmations, but you do, as a project application, you do this technical methodology tied to the national regulation. What are the savings? And banks need only one piece of paper that a supervising engineer confirms that this work is done according to this main project design. And these are the only two documents the banks need, and they just rely on the stamp of the certified engineer, because we put the statement that this certified engineer is, by their signature, confirming this is done. And banks takes this as a relevant, for example, now we have this capital rebate, so we award up to 50% of the grant, so we forgive you half of the loan if you achieve such and such savings. And this is the only one piece. So this is what I meant when I said simple and stupid. We just designed the system so the bank is not concerned about the achievement, and it's not legally responsible for this. We have the audit trail, and if we later find out that some irregularity, somebody was lying, somebody was, we will, as a member state, we will, as a ministry, we will be responsible to take this person to the court, ask for the recovery of the money. And this is how we gain the trust with the banks. And banks are willing to do this because they do business as usual. They approve financial transactions.
Mhm.
They are not worried about this technical regulatory stuff. That is our job as a managing authority. And I think this is the best we could do for this fast tracking, because then the banks don't have to adjust their procedures and design another new processes to implement EU-funded financial instruments. So I think it's
from what you're saying, Dijana, I understand that you have a full ownership of that, and that
yes,
everything, whatever you
so
just
we take care of everything. The state aid
whatever
issue,
you just
the
described actually
regulatory
reflects
issue. Yeah.
It reflects the experience that you have from the market so many years, and you're trying to make it as fast as possible in order, to see businesses, households, and whoever is taking advantage of these financial schemes to move forward. Yeah. That's great. But we will discuss how you entered this new era in a while, with the bottlenecks, what you have actually faced, and also what you're discussing probably with other managing authorities in other countries. I want also the perspective of Kamelia on the same topic, but this time from the public perspective projects. And Kamelia, can you say to share with us if you have observed similar failure points in public projects, or the bottlenecks in financing appear at different stages compared to the private or household investments? Are there any differences? Are there any similarities? Are there some parts that they are totally different and you need to evaluate in a different way, and with different tools, all these processes? Kamelia.
Yes. Yeah. In the public sector, if we compare, I would say there are similarities, but also differences. In the public sector, very relevant is this factor of 100% grants. And that's why I already mentioned that the chain breaks already in the beginning when we have the willingness of public authorities to go for ESCO contract or for blended funding financing, and once of a sudden, or they know somehow that there will be 100% grant program, and they simply don't even make the effort to calculate and to think about the pluses and minuses of the financial instruments. However, I want to say that we have some good examples in our experience, and this is based on the efforts which we are making to use these behavioral approaches and to overcome this widespread misperception of costs and benefits, and to introduce the concept of cost flipping, where we frame projects based on the value of energy savings, and then the narrative shifts from expenditure to return generating investment, because for the public bodies, this is the question, whether this is cost or this is investment when they make the decision. Yeah, this is the main difference, I would say. And I want to mention that the same aspects which Diana and Joanna mentioned about making it easy and simple, these are actually typical, because I mentioned the need of being realistic towards human behavior. These are typical behavioral tactics based on realism about human behavior to make the things to make the procedures easy and simple and appealing. We very often describe this aspect as administrative or just institutional, but this is typical aspect of human behavior, which motivates institutions to go for financial instruments when financing energy efficiency. So yeah, this is at this stage what I would add.
Thank you, Kamelia. And I recall that all three of you have mentioned behavior, you have mentioned mentality. So let's go deeper on that. I will start with Dijana. You raised two key issues, Dijana. Fast track underwriting, you mentioned in somewhat, and you also described something like grant mentality. How do these affect transaction speed and volume in practice?
It really affects our planning. As I said, you have this 1 year long negotiation procedure with the banks, and you are creating this trust relationship. And the EC is not helping inventing new and new instruments, which are cannibalizing the structures. Because, for example, our first financial instrument that we had for the SME efficiency, energy efficiency, the COVID break. And we had to terminate this funding agreement because money was flowing from all over the sites for everything, including the grants. And this is again, you have this break in this trust relationship. Then the new perspective came 21-27, and we said, and the Commission said, no, energy efficiency cannot be funded by grants. It will be funded only by financial instruments. And we were speaking this as a Bible, repeating everywhere. No one could be able to get a grant, but for the energy efficiency, it's a revenue generating project. It has to be funded by the financial instruments. And everybody believed us. But then modernization fund came, then the social climate fund came, then the Repower came, then the RRF, the Recovery and Resilience Facility, and Commission again allowed for the grants. And we as a managing authority, we are also the coordinating body for the EU funds. We can forbid to other ministries, you cannot have grants for the energy efficiency, but we are not in charge of the modernization fund, social climate fund, for the RRF, and then again grants were allowed. And then again, you cannot convince the stakeholders, the citizens, the businesses, the banks. No, we promise there will be no more grants, but every other season, some other instrument became available, and again, it can be grants. So although I praise the Commission always for introducing, because capital rebate, we are more competitive than the grant. Because as we said earlier, if we make it straightforward and simple and fast, and we give 50% of the capital rebate, which is the hidden grant inside the financial instrument, we are more appealing to the recipients than the grants, because for the grants you have to wait for the competition 1 year, then wait for another year to find out did you get a grant or something like that. You have to have an expensive bridge financing and finance the project on your own, and then wait for a year to get the money back. So we are more competitive. So what we saw in the other financial instruments, when you survey the recipients of the grants and financial instruments, people who receive both said never again grants, we will apply for a loan. So it's not the problem of the recipient's behavior, it's the problem of the ministries and the local. And of course, we don't have any authority over the local and regional government. So if any local or regional government decides to have a grant, because we have soon some elections, again, we cannot stop it. So I think people will change behavior. I mean, it is mentality, it is behavior, but we have the funds as the carrot. So if we provide the funds as a carrot and attract these recipients, they will go where the money is. That's what I meant when the supply will create the demand. And again, we have a stick for the other ministries but of course we don't have for the local level. So that's also the problem.
Thank you, Dijana. Actually, I can say that you are visualizing very well whatever you're saying. So you're giving us a very clear and nice picture of what is happening financially. I'm moving to Ioana because you said also about the issue with the behavior and everything. What is your perspective on that? Do you have any, let's say, examples that are related to the behavior? What is happening in Romania? We're discussing that country per country now because we would like to see also the similarities, as I said, and the differences between the countries. So any views also from your country would be very beneficial for the audience.
Yeah, thank you very much, Alice. So firstly, I fully agree with Diana, and I'm fully with that. We need risk sharing instruments and also technical assistance to make products easier for our clients, and also to be able to integrate into the digital platform that the banks have. All the banks are now working to decrease the time to yes for clients, especially for SMEs and households. Hence, any kind of document or technical assessment that needs to be added creates lots of complexity for the product. In terms of behavior, I mentioned earlier about a PV installation loan. I mentioned about energy efficiency loans, which are somehow difficult to implement because sometimes people firstly are waiting for the grants for different programs that we had in Romania with the energy ministry. Hence not applying for actually loans and waiting for the subsidies, which sometimes delays quite a lot and increases the costs and comes sometimes after 2 years since applying. So this is one angle, and the other angle is the awareness, the fact that sometimes people are not aware that they need to renovate, or they said that they have enough time. So rather waiting and seeing what's happening, also the renovation directive, also the requirement, rather than doing now. And I was telling you about the VTS2. We had an assessment in Romania looking how much the the heating cost will increase after ETS2 will be implemented, and also this affect the household quite a lot. So we said to them, let's use the funds that are available. Let's do projects together with the consultants and construction companies who are more than willing to support into this, and to prepare our stock for the upcoming regulation. We are also looking to set up products on renovation. Difficult to implement because we need a certification and EPC certificate before and after, and this creates, as I mentioned, the complexity. But also we started to implement different kind of products for the people to buy materials, building materials, in order to insulate, to properly efficientize the buildings. And this is something that all the banks are doing. PV installation, of course, are products offered by almost all the banks. And we work in partnership with the EPC contractor, with the installation company, to install such projects. And banks are offering lower interest rates, but from their own profitability rather than using some project. And I would say that also important for the banks are to have data. So data standardization and availability of data on energy performance are very much needed. And all of this can create the market for us to, let's say, increase the renovation loan to 3%, as I was telling you, that we actually need in order to support what is needed in Romania.
Thank you, Anna.
And in terms of SMEs, the same, using the programs. And also I find also on the SME side, on the company side, the being reluctant to support an audit certificate, for example. And for us as bank, not having such data would mean that we cannot include in energy efficiency program the loan, and creates problem with the marking the loan also in our green portfolio. Because also for us, it's important to increase the sustainable finance portfolio. We have a target to reach this year 25% of our corporate and SME portfolio in sustainable finance. So our objective, we work on many sides, with the green building, with the renewable projects, but also energy efficiency. And I can tell you that energy efficiency programs in our case are 1 digit, let's say, percent in our portfolio, so quite low versus the potential. But the green building on other side, on commercial real estate, are quite a lot and represent almost, let's say, 60% of our sustainable finance portfolio, the green buildings that we are financing, or real estate. And also, if we're looking only at the real estate portfolio, more than 70% is green. So here are lots of effort into this.
Thank you, Anna. And you mentioned several times the word data, and data is actually one of the main topics that we're discussing in the SMAFIN Expanded roundtables and the previous SMAFIN projects. And data scarcity, if I can say, something that was reflected in many of the fact sheets that we have produced. Thanks for sharing that. I'll move to Kamelia for this final statement. If you have 2 concrete examples, particularly coming from the public sector, especially when it comes to behavioral barriers, because we understand what is happening in the private market, households, SMEs and everything, but what is the behavioral mentality and barriers probably coming from the public sector?
From our experience, I want to share, we have several very successful case studies with public projects where we have used such behavioral tactics, working with our beneficiaries to overcome this systematic under-evaluation of future benefits. This is particularly problematic when public funds are used purely as grants. For this reason, we use public funding and provide very low grants, like 20-25%, just for bridging the financing gaps and leverage private capital. This was very successful, particularly for health sector, for the health sector, for street lighting, where we have the opportunity to attract such private capital. And we think that public funding should be used more strategically also for providing technical assistance, because the beneficiaries need this help to sit and calculate and strategize each cent which they use as public funding for different reasons. This will allow this public funding will enable the market rather than replace it. And of course, in addition, or actually on the front stage, we need targeted awareness raising and better communication, which already was mentioned. Because in many cases, when we provide 100% funding, either to public institutions or to residential buildings, people tend to misbehave, to misuse the energy instead of to create their new habits of keeping their dwellings warmer than needed, to use more electricity for lighting than they need. And then this goes to the public. They don't decrease their bills, and this goes as communication to the wide public that there is no saving actually. And this, of course, creates these behavioral damages in the market. So these are a few simple cases which I can share.
Okay, thank you, Kamelia. We have just 2 minutes left, so we need to close the session before moving to the next one. I have 2 questions in the chat here. Whoever wants to reply. The grants are for small number of population. Here it says, why the rest of wealthier population are waiting for the grants? This is more a behavioral question. Anyone from you that would like to?
If I may,
yes, please, Dijana.
It's this notion that the grant is free money. So whenever we can, what Kamelia said, awareness raising, we are propagating there's no free lunch ever. Because when you calculate how much of the public procurement of the consultants you have to pay for this grant, it's cheaper to get the financial instruments. So we have to promote the financial instruments as a free money you get in advance, because in the grants, you have to take an expensive loan, conduct the project yourself, buy expensive consultants to do them, and then wait 1 year. If you don't have any irregularities in the public procurement and all the checks and controls and all this administrative cost, maybe you'll get same as in the financial instrument or even less if you have financial corrections. So even for the public bodies, we were able to convince them that it's cheaper and easier to get a financial instruments, because they don't have all this additional cost that is hidden in the grant implementation. And they voted, when we were programming, they voted that they would prefer loans rather than grants.
This is what we call the under-evaluation of future benefits.
Yes, yes. Thank you. Thank you both. And the other question is about energy efficiency projects that do not require a bank loan, for example, on-bill financing or green bonds. Can those be considered as investments? If I'm reading well, the question, the ones that do not require a bank loan, like the one financing or green bonds, if they can be considered as investments. Is not clear as a question.
Yeah, but each cost for energy efficiency measures can be considered as investment. Correct me, the bankers. Possibly, I'm not financial expert, but I think that each expenditure for energy efficiency measures has to be considered as investment, because actually the case study is built on the savings on the energy consumption.
Maybe we have the trouble in understanding the question, because green bonds are usually done to finance the fund, which will finance several projects.
Okay.
Because you release green bonds to acquire the capital to finance number of projects, not one project. But of course, the project financed by the funds collected with the green bonds are cost of investments. But investing in the green bond is not an investment, if I understood the question correctly.
We have here from Hrvoje Marash the comment that says that it was mentioned that the additional grant funding caused financial market disruptions. Was there even an option to deliver funds, from example, modernization fund through financial instruments?
In Croatia, no, because modernization funds has a very low, short implementation period. If I understood from the colleagues from the Ministry of Environment, you apply specific projects and then you have 1 year to spend it.
Okay.
So in order to have this private leverage, it's impossible to do it in 1 year, because 1 year is needed just to do the public procurement of the banks.
Okay.
Because they came to us with the idea they wanted to top up our financial instruments, but we couldn't accommodate them, because so we just we made the demarcation, so they will finance the geothermal sources or something like that, not the energy efficiency, so we don't have the collision at the same time.
Okay, ladies, we need to close. We are already 2 minutes after the session, and we need to move forward. What I have just written here as a conclusion, let's say, of the discussion is that what clearly emerges is that bottlenecks are not confined to a single stage. They affect the entire investment pipeline. This is the first, let's say, result from this discussion. In general, the investment pipelines, those result from a combination of financial, regulatory, and behavioral factors, and those interact in different ways across the context, national or regional or local or other context that applies. And importantly, the challenge is not only to access finance, but the ability to structure scalable and bankable projects. This is what I'm keeping from this discussion. I want to thank Kamelia Georgieva, the senior expert from the National Trust EcoFund Bulgaria, Dijana Bezjak, the head of service of financial instruments at the Ministry of Regional Development and EU funds in Croatia, and Ioana Voinescu, head of sustainability at Banca Comercială Romana. I hope I said it better this time. Thank you for this discussion. I hope you enjoyed it as well, and we learned a lot. Definitely, I learned a lot from you. And now it's time to move to session 3. We discussed about the bottlenecks, but let's now discuss what actually enables them to happen, the investments, and how we can scale them. So without any further delay, I would like to hand over to Nicholas Stanchev, who will moderate the session 3, what enables scale, minimum conditions for market uptake. Nicholas, the floor is yours.
Thank you very much. And I think we saw some of the fractures in the discussion. It was really very useful. And yes, I think we really do come in, and I'm really glad to invite our panelists now. So first of all, we have, I don't know what order you see people, but I see Elena Ghiotti, civil and transport engineer, former investment banker, European investment bank banker, and an executive at EU level, as well as Despoina Kuzioka, head of climate and environmental strategy division, National Bank of Greece, and finally Eva Petkova, director department of development, green financing, communications at Fund Flag in Bulgaria. Zdrasti, Yasos. It's a pleasure to have all three with us. Our session is, as Alice just said, it's about how do we make, what tools do we use, such as standardized instruments, risk-sharing instruments, and so on, to actually end up with investments that are both bankable and scalable. And I will put a question first to Eleni. What must be in place before finance can flow? When you're assessing a national market is ready or not for scaled energy efficiency financing, a guarantee or a blended finance structure, what are the minimum conditions required? And have there been cases where these conditions look right on paper and still it's not marketable? Eleni.
Yes. Hello, good morning from my side as well. Thank you very much, Nicholas. Thank you very much, Alison, for inviting me in this very, very useful and significant workshop. My name is Eleni Yoti. I said before, I'm a transport engineer and I've been involved for many, many years in EU management funds in Greece, and also the last the 12 years I worked until very recently, until 3 months ago, I was working with EIB, the European Investment Bank. I'm mainly dealing, not as a banker, because my background is in engineering, mainly dealing with structuring and offering technical assistance that the bank is one of the 3 pillars that the bank is dealing with that. Just as an introduction, and everyone knows that for the recent, since 2020 or something like that, the European Investment Bank is a climate bank. Which means that it supports very heavily the green transition, and also, and for that reason, of course, all related projects in all related sectors. Now, if we talking about the question you said about using financial instruments and how to use them in developing projects of energy efficiency, I would like to give some concrete examples of how we move from design to transactions, and what are the possibilities. I would like to speak from the policy, let's say, perspective, as the European Investment Bank is the investment arm of the European Commission, trying to implement the policies there. So one concrete example can include the InvestEU guarantee-based instruments. The InvestEU guarantee is a significant instrument that reduces risk efficiently for banks and institutional investors to finance projects that are not that much bankable. So this is one significant aspects. The other significant aspect is the concept of blending the grants with the EIB loans. We have heard in the last session that there is a big concern, let's say, about the grants. However, there are a number of facilities and a number of programs the last years in EU about grants that can always be used for together with the loans in order to produce the final financing instruments. And then the grants can be used at an early stage to policy, at an early stage for the development of the project, and then loan can continue with finance scale and replication. Talking about the different grants and financing schemes, it's no need to mention all of them, but everyone knows that the cohesion policy, the recovery and resilience funds, InvestEU, and there is also the social climate fund and the modernization fund. They have restrictions, we have discussed that before, but again, depending on case-by-case project, it is a good opportunity to try to determine and explore possibilities. Grants can be blended with lending applications in order to provide the necessary financing scheme before going to the finance. And finally, there are also intermediate products via the national banks and the national promotional banks that EIB is supporting also this collaboration very heavily with this bank to develop transactions at scale and for climate adaptation, SMEs transition, and the bank, the EIB, can support the national banks to develop those activities. So, yeah, if I make just a conclusion on that, I can say that the instruments can be successful if they are designed correctly and having in mind the end product rather than only the tool itself.
So, Eva, what are the cases where it looked good, it should have worked on paper, but you weren't able to implement?
Hello, welcome to everybody. My name is Eva Petkova. I'm part of FundFlag, which is a state-owned institution which works more than 70 years to support Bulgarian municipalities. And thank you very much for the nice question, Nicholas. It's very nice to see you and all the fellow speakers today. As FundFlag, we have put a lot of efforts to construct financial instruments in the last couple of years. Some of them are targeted at energy efficiency for different sectors. I might say that the best example is FLAG-FISET project, which was supported under a LIFE program, where we have managed to set up a financial instrument dedicated to clean energy transition of municipalities and public companies. And the enabling conditions for happening of these financial instruments were more than clear. And the first thing I might say is the credibility of the counterparties involved, because both FundFlag and the municipalities have a lot of experience working together. So FundFlag really straightforwardly succeeded to popularize and give the needed push for more investment into energy efficiency realm. But also we had two other financial instrument products which we delivered under EU risk-sharing financial instruments. One was for energy efficiency for single-family building. And back then, a couple of years ago, it was structured under the framework of urban development funds. We have seen, nevertheless, the financial instrument was put in place. There was not a single application that was submitted by a final recipient. So this is one of the lessons we learned during the years, that even the best financial instruments are put on the market. If the market doesn't need them, there is no use of them. So we should follow the market, and we should follow really those counterparts which can really respond to the framework which is given to them. In that case, municipalities have a lot of more regularity, stability in their requirements of how much energy efficiency projects should they make in 1 year, etc., compared to the households, where the regulatory uncertainty is far more in place, and they are not sure with all the requirements that were seen before in regard of the grant mentality, in regard of grant talks, etc., etc. Now we are setting up a financial instrument for SMEs for energy efficiency and resource efficiency, a guarantee instrument where a capital rebate and technical assistance is envisaged for SMEs, but also for small and mid caps. And it will be put in front next week. We will publish the call, and we will see. We are putting it together with the United Bulgarian Bank in our consortia. So we will see what will be the demand there. But what I would like to say is, as a conclusion, is that where the things seemed quite structured, and it was the public sector with municipalities, nevertheless, the grants existed. There is still a strong push to use financial instruments in terms of blending, etc. Where, for example, for households, the market is not still sufficiently ready to propose financial instruments attractive enough for such counterparties. the financial instruments are not working. So we should look at the market, we should look at the counterparties involved and select those sectors where really the scale can be reached in a short-term period.
Thank you. And Despoina, in Greece, from your perspective, is the same problem of how do we identify the right product for the right, basically what you're saying, both Eleni and Eva, is that you have to have the right product to the right audience.
Absolutely. Hello from me too. Despina Kusioka, heading the Climate and Environmental Strategy Division for the National Bank of Greece, one of the systemic commercial banks. Honored to be here and joining this panel and this another cross-country lab. What can I say? I really won't have anything fundamentally new to put to the table, but I'll stress a couple of key messages more from the angle and from the perspective of a commercial bank. The scaling up of energy efficiency is not something new. Is a topic we have been trying to nail for over a decade now. What I wanted to stress is the fundamental key thread that cuts across all these efforts. And from my perspective and from the perspective of commercial financiers, is that finance alone cannot create scale and cannot create demand. And not surprisingly, this has been one of the key takeaways, the key outputs out of the work that we have done, and I have been participating in that. In the first working group of the European Energy Efficiency Coalition that Adrien so well described in the beginning of this lab. So there we have produced a recommendations paper, and it's clearly stated that renovation finance and energy efficiency finance only works when it is aligned with strong at national level and demand-oriented policies. And this, in practical terms, why does this happen? This is because we mortgage lenders do not own renovation decisions in the first place. And if I have the opportunity, I'll come back to that in a minute. So demand generation is paramount, cannot be stressed enough. Only when demand is there, even if at an early stage, only then can a pipeline of bankable, that all my colleagues stressed earlier, projects can be created, which in turn can motivate, can scale up investment. This is the toughest part. We need a steady flow of technically sound and investment-ready projects, and without aggregation, deals remain scattered, fragmented, and financiers are not tempted. My colleagues and Mrs. Yot in particular described and covered the policy earlier. Maybe looking at it more from the perspective of state planning and kind of legislative wise, this is also key. Public demand will be driven by that.
Yeah.
I make a little pause now, not to.
Okay. No, I think, but it ties in well with my next question, and I'll put that question to Eva, since I think that's something she has worked with a lot first. Technical assistance and the pipeline problem, because you described in your last words, demand cannot be driven from financial instruments. So can transactions happen without technical assistance? Is the real constraint the capacity to prepare bankable projects rather than the availability of finance? Clearly, it's not. I think you have all answered it, and Despoina drove the point home. So what role can standardization play in making a lender confident enough to aim for scale? Eva.
Yeah, thank you very much. The technical assistance is a very important incentive in the very beginning for energy efficiency project. And I fully agree with Despouina that the binding constraint is not financing. It is more the project preparation capacity and how to incentivize the final recipient to really want to implement this kind of project right now. So technical assistance is this kind of incentive. We have seen in FLAC-FISET project, because it was a project development assistance project under LIFE program, where this technical assistance was provided by a LIFE program and the financing was provided by Fund FLAC. So it was much about leverage, but how this technical assistance really can push these projects happen. And yeah, the technical assistance is an incentive, but without it, you also can get financing for such kind of project. But they are usually fragmented, small scale. You can't reach scale without technical assistance and standardization. That's what we have seen. And this standardization, we haven't reached it here in Bulgaria. Nevertheless, a lot of our colleagues also in the conversation here have put a lot of efforts into it. But I believe in the coming years, with the development of the market, this would happen. But what we have made in FLAC-FISET, we have standardized the whole procedure with templates. We have put inside the green eligibility checker of EIB because the financing is under the platform which FLAC implements with the support of EIB financing. That means that we aggregate this bundle of projects in one sector in order to satisfy our lender from EIB. And it proved quite successful, but the technical assistance should be quite linked with the financing. We should see this both incorporated into one product in order to really have this leverage effect from the technical assistance into it. And under technical assistance, we should not understand only energy audits. Yes, they are very important, but part of this, especially for the public authorities, is the financial modeling and even the financial analysis, where the municipalities can really see the benefits of these projects. Here, the group, all of us are convinced that the benefits are more than obvious, but for municipalities, this is not the way. And when they are seeing really the savings and this in a quite good structured business plan, they really see the logic of this intervention, and that these kind of projects are of they are adding value to their investments and to their municipalities. Thank you.
Yeah, so in other words, bringing together the financial instruments, but not thinking of technical assistance of nuts and bolts, but technical assistance in finance as well, because that's really where they lack the competence. Despouina, how do you respond to that?
I'd say that the question around technical assistance could have like multiple aspects, multiple reads to that. One, as you pointed out, is about financial technical assistance, and this hits us the perspective of how you create a bankable pipeline. Factors such as capital intensity, which is a characteristic of real estate renovations, the fragmentation of demand with small ticket sizes, the long and varied maturities, the perceived uncertainty around future savings, all limit lending without appropriate technical assistance to help in the financing side of it, the structuring side of it. And here, obviously, standardization is a big enabler. The other way to read this technical assistance is from the end consumer point of view, and look at it from the point of view of us, banks or other players in the ecosystem, how they outsource the entire process of, technically leading through an energy efficiency project, and so that the end consumer can take that off their minds, and that opens up a spectrum of roles, let's say, and models, business models for banks to operate in, collaborating, partnering, referrals, maybe even orchestrators of this technical ecosystem. So in both readings and in both aspects, standardization is key and is paramount to get right.
I love your idea of the technical assistance ecosystem. That's very, very good.
It is something that is in our minds and that is in the strategies of all commercial banks.
Interesting.
These
Eleni?
days.
Yeah, thanks. I mean, they're all right. I need just to compliment my co-panelist. Indeed, and if I need to make a statement, is that it is many times the projects do not fail due to lack of financement, but due to lack of proper preparation and exploitation of what the project is. This is a crucial issue for all the project. So. As said before, technical assistance can cover a number of issues and a number of themes to be addressed and to be looked for in order to try to prepare a project bankable. We are talking about going from policy ideas to a concrete bankable project. So the European Investment Bank, as you know, has three pillars: the lending, blending, and advisory. The lending is a direct lending. The blending is to combine loans with grants, as said before. And advisory is a sector that has been developed very heavily the last 10, 20 years because the bank has also a very good team of engineers and economists. So what is needed is to go to the project and then try to identify the crucial parameters that needs to be studied and designed before or in parallel with seeking the financement. The technical assistance from the bank is offered for free for public sector, but also is also always linked to potential financing. What kind of technical assistance is needed is going from strategic plans, then we need to develop the project pipeline, the cost-benefit analysis and the market analysis to see where the project stands and where it can get funds. The financing structure, I said before from my colleagues, and the technical parameters are the two very significant aspects that have to be studied and developed, and also support to prepare the project application sometimes, etc. But one last and very crucial issue that technical assistance can interfere is to make the so-called capacity building. There is a need of promoters that want to develop projects. There is a question and a challenge how their capacity is proper to undertake and to deliver the project. So in that sense, we need guidance and guidelines development and the full standardization, standard environment to work in there. So this is the full range of technical assistance components that are needed by the promoters in order to prepare right and bankable project. And to my opinion, this is a very this is the most enabling factor from what we said.
Which brings us to what is replicable or not. And Dijana, if enabling conditions are there, which and we have the technical assistance, what are some universal requirements and which depend on a specific market? Maybe we can break out. Earlier we heard about the problems of FLAG working with one particular audience versus another one. So if you were devising this for building something from scratch?
I suppose, thank you, dear Nicholas. I suppose that a conceptual way to kind of look at this would be to say that, as we all feel a strong urgent push to replicate successful models and not to invent from scratch, we have to think again, because in practice, a lot of what we already discussed is transferable or is directly transferable, and some aspects are market and local context specific. And the conceptual way to kind of think about it is that what is consistent and present across markets is the fundamental mechanism, i.e. the demand that's policy driven, the pipeline generation aggregation, and the standardization and option and the benefits of the technical assistance. Also, of course, financial institutions intermediation and our active role. However, what is market specific is the particular parameters, the particular ways in which the aforementioned fundamentals can work in each market. For example, what type of projects can be eligible? What typology of incentives can be used? What ranges of future savings can be expected from such and such and such different energy efficiency interventions? Another one that was earlier covered substantially. What can we expect in terms of consumers' behavior and consumers' patterns? In certain markets, consumers are more financially aware and more financially or economically, I should say, sensitive to factors such as energy price. In some other markets, tax incentives work better. So as I said, to close off, the fundamentals are universal. The absolute must-haves that we covered. The way you go about implementing them in any local market and the specifics of how you structure your incentives, etc., definitely need to be local context
Adapted
specific.
to the local context. Eleni, parakalo.
Yeah. Right. I forgot to mention before about technical assistance that the bank is providing a very specific project during the last 10 years or even more. The so-called ELENA stands for European Local Energy Assistance. So this is a free program for project promoter to develop with EU funding their own projects and helps local and regional authorities to enhance also their capacity. I'm saying that because this is a question of transferring of know-how between the different countries. So as the IB works along Europe and through all the countries, so there is the know-how and how to be transferred. However, for each country, there should be taken into account heavily the local condition of the local market, as we said before. Going back to the housing now, the overall energy efficiency in housing, we must keep in mind that this is a very significant sector, because more or less the 40% of the total goal for CO2 reduction through our climate objectives and our climate plans in Europe, it will come through the renovation and an energy efficiency of public and private buildings. And in that sense, even if there are some grants, as we said before, or different financial instruments, in those instruments, the private sector should contribute heavily in order to address all this big challenge. And the last issue I would like to mention is that, speaking about designing projects, programs, and trying to make them bankable and then find the financement. Another challenge and another enabling factor is that we need in each country to maintain a predictable and credible regulatory framework. If you design an instrument and then in the course of the day the regulatory framework changes, this might create some considerable, let's say, challenging for going further. So yeah,
you've mentioned I think one of the key problems, the stop and go, the changes of regulations, and I think maybe Eva can address that from her personal experience. I see her smiling already. Thank you, Eleni. Eva.
I quite agree both with Eleni and Despoina on this question and on the replicable universal themes that undercover the energy efficiency investments, the project aggregation, standardization, the need of technical assistance. I do believe what Dijana earlier said, that the Commission should also be more straightforward in terms of encouraging financial instruments to be the only option for financing of energy efficiency investments, probably a part of social climate fund and vulnerable groups. For other investments, the option each state to choose whether to use 100% grants or no is not a good option. And we are seeing this continuously in Bulgaria, as Bulgaria has promised in its recovery and resilience facility, only one of the schemes to be the last one for 100% grants. And unfortunately, this continues until now, and even is structured in other financial mechanisms that are continuing implementation, which really crowded out financial instruments from the energy efficiency market. So this predictable regulatory environment is very important, but also the political will and coherent vision of how energy efficiency investment can be implemented in a 10-year or 20-year period. And this is part of the success of the Baltic countries or Poland, which is also always given as a good example in energy efficiency financial instruments, and why Bulgaria does not succeed here, because the political will is not using a single vision for how energy efficiency should be financed. And when the Commission is allowing different governments to implement different decisions, it is no good, neither for the EU, neither for Bulgaria. And it's a pity that Bulgaria still doesn't have a national hub under the European Efficiency Coalition, but in fact, only Van Vleck is now a member of this coalition. Thank you.
Thank you so much. Just in parentheses, Eva, it's not just Bulgaria that suffers from this problem. Thank you, all three of you, Eleni, Despoina, Eva. What has come out of our conversation? One, Eleni has reminded us that instruments succeed when they're designed about the end product, actual innovation, actual investment, not around the tool itself. Second, Eva gave us a striking illustration, a well-structured financial instrument for single families, not a single application, crowded out probably. No, actually weren't involved, but why would they when they see what's happening to multifamily buildings? The money's there, the market's not. Municipalities work because they have institutional capacity, they have regulatory certainty, households don't. Another key point is technical assistance is not an add-on. It should be embedded in the financing. Third, Despoina made the point, and it really, in fact, finance does not create scale. It cannot create demand. She's offered a really nice framework that I would like to close with: fundamental mechanisms, policy-driven pipeline, aggregation, standardization, technical assistance, active financial intermediation, consistent. That's true for all markets. What's market specific is how do we calibrate them? Which projects, which incentives, how does it fit with the consumer behavior in that specific market and specific country? Replication is not about copying the model, it's about applying the proven mechanisms with local parameters. And one thing that came out from all three of you is this issue that choosing from grants and financial instrument, it's not neutral. And that was also true of our last session. The point was made very strongly there as well. 100% grants, that has to stop because finance will never be able to compete with that. And stop and go frameworks undermine the very market conditions that enable scale. The Commission's role encouraging financial instruments as default should be the default, and it really is essential. Again, I want to thank you, Eleni, Eva, and Despoina for this discussion. I hand it back to Kiki. And
thank you very much, Nicholas, for your moderation.
Ευχαριστώ πάρα πολύ. Благодаря.
Thank you, Nicholas, and thank you to Eleni and Despina and Eva for this very insightful discussion. I have kept some notes, but first I would like to give the floor to our coordinator, Kiki Papadopoulou, to reflect on what was discussed. And after that, I can just summarize with a few bullet points, Kiki, if you allow me. Yeah.
Of
And
course.
I also would like to call all speakers to open their cameras and be at this moment together with us. So, Kiki, the floor is yours.
Yes, thank you, Elise. And I would like very much to thank all speakers, all panelists. It was a very substantive discussion. I think it was with very good points came out. So of course, some of them more in a great percentage are known to us as we have worked with these issues over the 6 years. But I can say that this open dialogue gave us very much thought and many topics to work in further in SMAFIN and in the framework of the National Hub, as we can take them one by one, these barriers and the proposal, the enabling conditions that came out, and work and further expand and study and come with policy recommendation by each one. If I can keep something, let's say, overall from this discussion is that we need to have an how to say, a steady view and vision from the EC and our national governments on the financing of energy efficiency. Of course, there are things happening as geopolitical situation that needs they need to respond with flexibility. But as we all admitted during this discussion, we have to be steady to our vision and not intervene with tools that compete each other. The other thing that gave me inspiration is the behavioral aspect that came out through the discussion. And as we both, me and Elena, are members of the behavioral working group of the ENR, taking this behavior aspect in a second stage beyond the usual typical tips of close your windows or open the windows, and the behave in financing is a topic that we can bring to the working group and work further on this. So from my side, I'm very happy. Many topics to work further, and thank you very much all. And of course, you, Alice, for organizing, and our partners in the project that cooperate and worked for this lab.
Thank you, Kiki. Adrien, I was about to ask you if you want to reflect on something on this, but you raised your hand. So please, the floor is yours.
Yeah, no, I'd like to really thank from the heart the consortium and the speakers who gave their time for this event. I sincerely believe that beyond all political and administrative reforms that we can put in place, which we are all, I think, one way or another involved in, I think we can only make these changes come to reality if we increase the capacity of all stakeholders to understand what we want to deliver. And I'd like to really insist on the human factor here. It's not just about the money, it's not just about the technology, it's not just about Brussels or the government or the local and regional authorities. It's really about people understanding what they need to do. It's about capacity building. And I think this webinar I found really gives very good insight, and I really love listening to what is going on the ground. I can tell you not everything is rosy, not just in the member states that we're presenting, it's everywhere. But I think there's a lot of learning for other member states and people in the member states also. And really like to emphasize that we need to work on the people who are the agents of change. And also to build on that, just to mention, because I forgot that, but next week on the 6th of May, we're organizing the Clean Energy Transition Investment Forum, which is exactly the same idea, is to bring together the people who are working on the ground to make this kind of financial instruments happen, to put in place the one-stop shops that will stimulate the demand and so on. We're actually a bit victims of our success because we had to close registrations yesterday. So if you're not registered, just know probably you haven't taken your ticket to Brussels anyway. You'll be able to watch it online, so you can easily watch. And I can tell you there will be a lot of very interesting sessions. So do stay tuned for that if you're not registered. And if you're registered, I'm looking forward to seeing you there.
Excellent. Thank you, Adrien. So I'm the lucky one to close this session. As I said, I have written down some notes, but definitely whatever was discussed today, it will be captured in the third cross-country lab SMAFIN Expanded fact sheet that will be released very soon. So you will be able also to see the bullet points of the discussion. So what I'm highlighting from this one is that there is no single solution when it comes to financing. This was highlighted in both main sessions when we discussed about solutions and the bottlenecks. If we want to enable scale, this requires a combination of elements like a stronger project aggregation, better alignment between public and private actors, appropriate risk-sharing mechanism, stable and predictable frameworks in some cases that can support long-term investment. And while some of these challenges are structural, that was highlighted in both sections, some others can be addressed through targeted interventions and improved coordination across levels of governance and across markets. That was also highlighted very well by Croatia from Dijana, that it's a central hub that is taking the whole risk for investment. So on my behalf also, I would like to thank the project partners that mobilized their national speakers. I would like to thank all speakers. I see here it's Kamelia, Georgieva, it's Eleni Yoti, it's Despina Kuzioka, it's Dijana, it's Ionescu, who else I forgot? I'm sorry.
And Nicholas, of course.
And of course, Nicholas for the moderation, definitely. And for sure, I would like to thank Adrien Bullier, our advisor here, that he was with us today and he opened this session. So from my side, we look forward, already Kiki said that, to continue this exchange in the framework of the SMAFIN Expanded projects. We are now in the period of the third national roundtables happening across countries. So thank you very much. I wish you a very good rest of the day and happy May 1st tomorrow for the one taking a long weekend because of the celebration. So thank you everyone. Have a nice day.